A wall of liquidity is about to enter the markets. With Japan's currency collapsing right before our eyes, the US has reportedly entered into an agreement with them to prevent Japan's central bank from dumping US Treasuries, creating a doom loop for both countries. What does this mean for liquidity absorbers like Bitcoin? Well, one thing's for sure. Institutions are starting to flow in, as $429 billion asset manager reported owning 831 million in Bitcoin ETFs. Is this just the beginning? Plus, Argentina becomes the latest nation state to get into Bitcoin mining, as the game theory continues to play out before our eyes. Like inevitable currency devaluation, nothing stops this train. Welcome to Bitcoin Daily. I'm Dante Cook, head of Swan Business. A massive wall of liquidity is about to enter the markets. In an unsurprising agreement, the US and Japan reached an agreement on FX intervention. Over the last several weeks, Japan has spent billions of dollars trying to prop up their currency, which rose to as high as 158 yen to the dollar. And it started to show signs of working. But over the last 2 days, we've seen a reversal as the yen has began to collapse again to almost 156 yen per dollar. This spells disaster for Japan and the US potentially, as Japan is the largest holder of US Treasuries. Only 4% of its Forex reserves are in gold. The rest, almost exclusively, are in US Treasuries. Without the US intervening with swap lines or backdoor liquidity, Japan would need to sell its US Treasuries in order to prop up its currency, which would lead to bond yields rising, which would cause the yen to weaken even further. And because of this, I see this as just the beginning of another massive wall of liquidity entering the markets. And you know what else is getting a wave of liquidity from institutional players? Bitcoin. $429 billion asset manager Susquehanna International reported earning $831 million in ETFs. You know what? Speaking of institutions and ETFs, approved spot Bitcoin ETF issuer Van Eck just announced their market vector meme coin index. They haven't done so great in the Bitcoin ETF race, and so they're finding other ways to capitalize on the crypto craze right now. The market vector meme coin index has just 6 assets in it. Let me read them off and try not to be disgusted. Dogecoin at 30%, Shiba Inu at 28%, PayPay at 14%, Dog with Hat at 13%, Floki at 7%, and Bonk at 6%. It's kind of shocking that an institution would offer this to retail clients, but I guess it's not at the same time. Because the money is broken, more and more people are turning to gambling. In 2023, Americans spent $113 billion on lottery tickets. That's more than movies, books, concerts, and sports tickets combined. Back to the institutional thread for a second. Even Bitcoin haters like Keith McCullough are starting to realize that it's Bitcoin and not crypto, and Bitcoin is a legitimate institutional asset.
So Solana breaks back to bearish trend today. You already had Avalanche down there and a lot of these crypto crappers down there. Bitcoin's teetering on a trend breakdown. So it had its move alongside the NASDAQ, but Bitcoin is not crypto. So pay attention to that. There's an institutionalization of futures, don't forget, in Bitcoin. The rest of this crap, it's crap today.
Like Saylor said a few years ago, all your models will be destroyed. The game theory is playing out in Bitcoin, and real money is flowing after real productivity in real assets, which is why nation states are starting to get into the game, as Argentina became the latest nation state to get into Bitcoin mining, as it's purchased over 1,200 machines to mine Bitcoin using stranded gas. A widely known and respected Bitcoiner, Mark Moss, pointed out this trend to George Gammon on his podcast over a week ago.
The reason why this is important is two reasons. One, currently the plan is the existing plan is to build a secondary power plant that only gets used in times of need. That's a lot of money going to waste. So now they can produce Bitcoin mining, so they can turn that into a profit center and then push that power back. Now, the rest of the world wants to know about this. How can other countries that are producing a lot of natural gas and need a lot of high base load do the same thing? And so it's starting to change the world that way. We're starting to see, even in Africa, places that don't have energy, they want to put in a new hydro dam, for example, but there's not enough people there to make that hydro dam investment economically viable. So what they can do is they can put Bitcoin mining there until there's enough demand for the power, and then the Bitcoin mining can just leave and go somewhere else.
Pretty soon, every nation will be mining Bitcoin. It's the most profitable and effective way to fund new infrastructure and new development. Almost a year ago today, the Kingdom of Bhutan became one of the first nation states to mine Bitcoin. And just last month, the nation state announced that it plans to increase its Bitcoin mining capacity sixfold. And you know what? Right now, it seems to be a pretty good time to be getting into Bitcoin mining. According to the Blockware team, the Bitcoin mining difficulty is projected to drop by 7% tomorrow. That's the largest decrease in the difficulty adjustment that we've seen since Bitcoin was at $16,000 a coin. Continuing this thread of sovereign nations and institutions getting into Bitcoin, Tether is another institution that is pouring massive capital into Bitcoin. It plans on getting to 100 exahash of mining hash rate deployed in Bitcoin by 2026 through the help of Swan's managed mining service. Swan announced yesterday its managed mining service, which is aimed at institutional investors looking to invest over $100 million or more into Bitcoin mining. With this service, large institutions like Tether are going to be able to own their assets, not Swan, and get the industry's first real-time dashboard for this segment of the market that allows them to view their assets, view their hash rate, view the Bitcoin flowing into their wallets in real time. This is not cloud mining, and this is not for retail. But there is a way that retail can get into Bitcoin mining. Did you see that announcement from Constellation Heating? You're going to be able to heat your pool with Bitcoin miners. It says that this product is aiming to ship in 6 weeks. It's going to be a hot summer. Bitcoin miners have so many applications and use cases that have yet to be productized or explored yet. But one thing has been explored about Bitcoin mining and found to be falling short, and that's the FUD that Bitcoin isn't good for the environment. In a recent paper published by Daniel Batten, Bitcoin mining expert and former Greenpeace activist, if just 1% of the 6,000 megawatts of Bitcoin mining in the United States switched to vented methane, that would be a reduction of 131,220 metric tons of methane. That's the same as 9 billion miles driven by an average gas-powered car. Whether we're talking about Bitcoin as a store of value, Bitcoin in the macro economy, or Bitcoin mining in the environment, the backdrop remains the same. The system is broken, and for each generation in America, things have continued to get worse and worse. Take a look at this chart about America's war on the young. At 25 years old, the pre-tax income that our grandparents had was $74,000, and the price to own a home relative to that income was just 3x. Fast forward down to us. At 25 years old, the average pre-tax income is just at $56,000, and the cost to own a home relative to that income is 7 times higher. Bitcoin provides better returns, a better environment, and a better future. And with that, we're signing off for today. This is Dante Cook with Swan.com. Happy stacking.